Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in the world of business. So today we have a really interesting filing from Lumen Technologies Incorporated. It is an amended report, a Form 8K/A, and it seems like they're correcting some things and adding some important financial details that were missing at first. Buckle up because we are diving into what this means for the company, and it's in VEV. Stores, before we dig in, if you like getting these no fluff, straight to the point breakdowns of important corporate news, make sure you are subscribed, and if you want to chat about these filings with other like-minded people, join our Discord community. It's linked in the description below. This is essentially a follow-up to an earlier report from February 2nd, 2026, where Lumen announced they had completed the sale of their mass markets fiber to the home business in a bunch of states to AT&T Incorporated. The purchase agreement itself was signed back in May 2025. So this filing is mostly about adding the financial meat to that deal, that essential pro forma financial information that they were required to provide. So the big story here is the sale of this business segment. This was a substantial part of their operations, spanning across Arizona, Colorado, Florida, Idaho, Iowa, Minnesota, Nebraska, Nevada, Oregon, Utah, and Washington. As you can see by the description of the purchase agreement here, this was a big deal that has been in the works for a while. It's important to remember that the original report detailed the completion of this sale, but this amendment is all about providing the financial picture that illustrates the impact of this divestiture. What we are getting with this amendment is the crucial pro forma financial information. This means they are showing us how the company's financials would look not just before and after the sale, but in a hypothetical scenario considering the sale has already happened. It is like looking at a what-if scenario, but this is the official version presented to regulators, so it can't. Use a lot of weight. They've provided an unaudited pro forma condensed consolidated balance sheet as of the 30th of September 2025, and also unaudited pro forma consolidated statements of operations for the fiscal year ending the 31st of December 2024, and for the interim period that ended on the 30th of September 2025. These documents are key to understanding the financial consequences of selling off that chunk of the business. This filing is an amendment to a previous report, and it's specifically focused on adding item 9.01, which deals with financial statements. And exhibits, in this case, they are adding the pro forma financial information, which basically recalculates their financial situation. As if the sale had already occurred, this helps investors and analysts understand the true impact of the transaction on the company's balance sheet and its income-generating ability. It is where we get to see the numbers that tell the real story beyond the press release. Let's look at what these financials might reveal when a company sells a significant business segment it usually aims to streamline. Operations reduce debt or focus on more profitable areas. Without this pro forma data, we could only guess at the extent of the financial shift. But now we can see the hypothetical numbers for their balance sheet as of September 2025 and their operational results for 2024 and the first 3 quarters of 2025. This gives us a clearer picture of Lumen's financial health and its strength. Jig direction post-sale, it suggests they are trying to become a leaner, more focused company. Think about it like this. If you were selling a part of your house, you'd want to know how much your remaining property is worth and what your ongoing bills would look like afterwards. This filing provides that kind of clarity for Lumen's business. It helps answer questions like, is the company still strong? After this sale, are they in a better financial position? Have they reduced their liabilities, or are they more liquid? Now, the pro forma statements are designed to give us these answers. We can infer that Lumen is going through a strategic repositioning. They are likely shedding assets that may not be core to their future growth, or that are perhaps more capital intensive. The fact that they are selling a fiber to the home business that they acquired from AT&T themselves in a massive deal years ago is quite telling. It signals a potential shift away from the consumer residential market towards other areas of their business, perhaps more lucrative enterprise solutions or different network technologies. The shares traded under the ticker LUM on the New York Stock Exchange would be the primary way investors track the company's performance, and this sale would certainly impact those valuations. The strategic move to sell off this mass market fiber business is a significant event for Lumen Technologies Incorporated. This is not just a simple transaction, it's a reshaping of the company for the future. It is about shedding a part of the business that perhaps wasn't performing as expected, or that didn't fit their long-term vision. The sale to AT&T is a reversal of sorts given Lumen's history with acquiring these kinds of assets. This suggests a new strategy is in play. Now let's consider some potential IMP implications. While the filing doesn't give us explicit numbers for the sale proceeds or the exact impact on debt reduction, the pro forma statements will reveal how the balance sheet has been altered. This often means looking at changes in assets, liabilities, and equity. If they use the proceeds to pay down debt, that is a positive sign showing improved financial stat. ability if they are holding onto the cash or investing it elsewhere, that points to different strategic priorities. This filing is essentially an update to a prior disclosure, and its primary purpose is to fill in the financial blanks that were left in the original report. This is common practice when a significant corporate event like a divestiture occurs. The company has to ensure it provides all necessary financial data to comply with regulatory requirements and to keep investors fully informed. It's a sign of responsible corporate governance that they are taking the time to provide this detailed financial information, even if it means an amended filing. Now, from a broader perspective, this sale could be seen as Lumen trying to focus on its core strength, ease. Perhaps areas like enterprise networking managed services or hyperscale data center support. These are areas that might offer higher margins and more predictable revenue streams compared to the highly competitive and often lower margin mass market fiber business. This move could indicate a move towards higher value services and a more specialized telecommunications offering, looking at the broader market for telecommun. Asian companies, especially those involved in broadband and fiber infrastructure. This divestiture fits a trend of consolidation, and strategic refocusing. Companies are constantly evaluating their portfolios to ensure they are invested in areas with the greatest potential for growth and profitability. Lumen is signaling that this particular business segment no longer fits that criteria for them. The fact that Lumen Technologies Incorporated is registered under the Securities Exchange Act of 1934 and has its common stock listed on the New York Stock Exchange is significant. It means they are subject to strict reporting requirements and transparency obligations. This amended 8K filing is a testament to that system of oversight, designed to protect investors by ensuring they have access to accurate and timely financial information about public companies like Lumen. This is not just about numbers on a page, it's about the story. Those numbers tell Lumen has divested a substantial asset, and this amended filing allows us to see the financial consequences of that decision. We need to look at the pro forma balance sheet to see how their assets and liabilities have shifted, and the pro forma statements of operations to understand the impact on their profitability and revenue streams after hypothetically accounting for the sale. Ultimately, this filing is a crucial piece of the puzzle for understanding Lumen Technologies Incorporated's current financial standing and its strategic future. It provides the necessary financial context to evaluate the significance of the recent sale of their mass markets fiber to the home business. So what is my take on all of this? Lumen is clearly in a period of transition, shedding a business that might have represented legacy operations or perhaps a more challenging competitive landscape. The move to an amended filing suggests a commitment to providing comprehensive data, which is good for transparency. However, the real story will be in the numbers within that pro forma financial information. Is the company financially stronger post-divestiture? Does it appear to be on a more sustainable path for growth? These are the questions investors will be asking. The risks here include whether the remaining business segments can adequately compensate for the lost revenue, and whether the strategic pivot will indeed lead to greater profitability, or if they are moving into an even more competitive arena. Opportunities lie in the potential for increased focus on higher margin enterprise services and improved financial flexibility. If the sale proceeds were used to reduce debt, the key takeaway is that Lumen is actively managing its portfolio, and this is a major step in that ongoing strategy. This is a company actively trying to reinvent itself, shedding older or less profitable assets to focus on what it believes will be its future drivers of success. The success of this strategy will hinge on the execution of their plan for the remaining business segments and their ability to capture value in those chosen markets. Alright, that's our breakdown of this amended filing from Lumen Technologies Incorporated. What do you think about this strategic divestiture and what it means for the company's future? Let us know your thoughts in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more deep dives like this. And don't forget to join our Discord community linked in the description below. Thanks for watching, and we'll see you in the next one.